Welcome to the Deep Dive. This is where we take all that complex information and, well, really boil it down to the insights you're looking for. Today, we're diving into Mazagon Dock Shipbuilders Ltd. They're a major player, obviously, in India's defense setup. We've got the official numbers right here, the unaudited financial results for Q1 of fiscal year 2026. So that's the quarter ending June 30, 2025. These were just approved by their board just today, July 28th, 2025. So our job today, unpack these figures, see how they stack up against past performance. What are the key takeaways telling us about Mazagon Dock's health right now? And for our listeners around the globe, you'll hear us mention figures in lakhs. Just so you know, 1 lakh is 100,000. So we're talking pretty significant numbers here, often in rupees. Okay, let's get into it.
Exactly. We'll navigate through the key results, both standalone and consolidated, and, highlight what really jumps out, add some context where we can.
All right, let's hit those headline numbers first for Mazagon Dock in Q1 FY26. What's the immediate takeaway?
Okay, looking straight at the consolidated unaudited results for the quarter ending June 30th, 2025. Mazagon Dock reported revenue from operations of 2,062,559 lakhs.
262,559 lakhs, so roughly 26.26 billion rupees. How does that compare? Year over year, quarter over quarter.
Well, this is where it gets interesting right away. It's a bit of a mixed bag. Compared to Q1 last year, fiscal year 25, revenue actually grew. It's up about 11.39% from 2,035,702 lakhs. So that's positive on an annual basis.
Okay, good start there.
But if you look at it sequentially, so compared to the previous quarter, Q4 of FY25, that was 3,017,441 lakhs. We actually see a drop. It's down about 17.3%.
Huh. So up compared to last year, but down compared to the last 3 months. Interesting. Okay, that's revenue. But, revenue is only part of the picture, isn't it? What about the bottom line? The profit figures, what are they showing?
Right. And this is where it gets really quite fascinating, maybe even a bit counterintuitive given that yearly revenue growth. The profit for the year, so the net profit for this Q1 FY26, it came in at 45,215 lakhs.
45,215 lakhs.
Now, compare that to Q1 last year. It's actually a big drop, down about 35.04% from the 69,610 lakhs they posted in Q1 FY25.
Wow. Hold on. Down 35% year over year, even though revenue was up year over year.
Exactly. Significant decrease year on year. But then look quarter on quarter. Compared to Q4 FY25's profit of 32,529 lakhs, it's actually up, a healthy increase around 39.0%.
Okay, my head's spinning a little. Up YoY on revenue, down YoY on profit, but up QQ on profit, despite being down QQ on revenue. What's driving that disconnect, especially the big year-over-year profit drop? Must be expenses, right?
You've hit it right on the head. That divergence is the key puzzle here. Let's look at total expenses. For Q1 FY26, total expenses were 2,034,805 lakhs. Now compare that to Q1 FY25, where expenses were 1,073,923 lakhs. That's a big jump year over year, up about 35.0%.
Okay, so expenses rose roughly in line with that profit drop percentage.
Precisely. But the real story within those expenses, the absolute standout figure, is under the line item provisions. Get this. In Q1 FY25, provisions were just 3 lakhs, basically nothing. In this quarter, Q1 FY26, 54,010 lakhs.
Whoa.
54,000 lakhs from just 3. That's astronomical.
Yeah.
Can you quickly explain for us what exactly are provisions in accounting terms, and why would they jump like that for a shipbuilder?
Absolutely. So think of provisions as money a company sets aside because it anticipates a probable future cost or liability. The exact amount or timing might not be certain yet, but they know something's likely coming. For a company like Mazagon Dock, building complex things like warships, submarines, a jump this massive often signals they're bracing for something significant.
Like what, for example?
Could be several things. Maybe expected warranty claims on ships already delivered, perhaps penalties if they foresee delays on current big projects, or it could even be a change in how they account for costs on long-term contracts, maybe recognizing more potential costs up front.
Essentially, it means they're anticipating a fairly large financial hit down the line and are putting money aside now to cover it. It's a major flag in the financials.
That makes sense. A huge flag indeed. It really points to potential operational issues or risks bubbling under the surface. Okay, so that massive provision largely explains the year-over-year profit plunge. What about earnings per share, the EPS, after all this?
Right. The EPS, basic and diluted EPS for Q1 FY26 came out at 11.21 rupees. Now, that's a small dip from the 11.26 in Q1 FY25, which reflects that year-over-year profit drop we just discussed.
Makes sense.
But it is an increase from the 8.06 reported in Q4 FY25, aligning with that quarter-over-quarter profit increase. And just to note, the company's paid-up equity share capital face value of 5 rupees per share that stayed constant at 20,169 lakhs across all these periods.
So no major share issuances or buybacks clouding the picture. Stability there.
Exactly. Seems like a stable capital structure during this time.
Okay, so we have the headline figures and that huge provision story. Let's try and connect this to their actual operations.
Yeah.
Does the report give us any clues about, say, how shipbuilding's doing versus submarine work or repairs? Any segment details?
Well, this is another really important point about interpreting these results. The report explicitly states that Mazagon Dock Shipbuilders Ltd, because it's primarily involved in defense equipment production, it's actually exempted from segment reporting.
Exempted, meaning what exactly?
It means under the Indian Accounting Standard 108, they don't have to break down their revenue or profit figures by different business lines. So, unlike, say, a car company that might report sales for SUVs versus sedans, Mazagon Dock doesn't separate out shipbuilding versus submarine construction versus repair work in these public financials.
I see. And that's common for defense contractors, maybe due to sensitivity?
Often, yes. National security considerations can play a role. So the result for us, looking at this report, is that we only get the consolidated big picture. We can't see from this document if one specific area, like submarine building, is doing particularly well or poorly.
That's a critical limitation then. We're flying a bit blind on the internal dynamics. Okay, so no segment breakdown. What else does the report tell us about their structure or partnerships?
It does mention their associate company, Goa Shipyard Limited. Mazagon Dock holds a 47.21% stake there. And their share of the net profit from Goa Shipyard in this quarter was 3,287 lakhs. So that contributed positively to the overall consolidated profit figure we saw.
Okay, so they benefit from investments in related companies too.
Correct. It shows their overall financial picture isn't just about their own dockyards. These strategic holdings matter as well.
Got it. And overall, the report itself, how reliable, how formal is this?
Oh, it's very formal. It's prepared following all the Indian accounting standards in IND-AS. And importantly, it's undergone a limited review by their statutory auditors, CR Sagdao & Co.
Limited review, meaning not a full audit, but checked.
Exactly. It's a standard procedure for quarterly results. It provides assurance that the numbers comply with accounting principles. And, as we noted, it was formally approved by the Board of Directors today, July 28th. The report even notes the meeting time started 1330 ADERS IST, ended 1535 ADERS IST.
Very precise.
Yes. It emphasizes this is a formal update from a Government of India undertaking, which is also ISO 9001 certified. So the numbers themselves, as presented, carry a high degree of credibility based on regulatory processes.
Okay, so wrapping this up then. We've gone through Mazagon Dock's Q1 FY26 results. What's the big takeaway you want our listener to walk away with?
I think the main story is this tension in the numbers. You see year-over-year revenue growth, which on the surface looks good, but then a really sharp drop in year-over-year net profit. And the absolute key driver we identified for that drop was that enormous spike in provisions. It completely changes the narrative from just looking at revenue. It highlights just how dynamic things can be and points towards significant expected future costs or liabilities.
A really fascinating dive. It shows how reading the headlines isn't always enough. So what's the final sort of provocative thought you'd leave our listener with on this?
Well, think about this. We see the huge financial impact of that jump in provisions. It's right there in black and white, 54,010 lakhs set aside. But the report, because of its structure and the segment reporting exemption, it doesn't explicitly tell us why. So the question I'd leave you with is, what could be the specific operational issues or maybe strategic decisions happening behind the scenes at a major government defense contractor like Mazagon Dock that would necessitate such a dramatic increase in provisions right now? And perhaps more importantly, if we could uncover those specific reasons, maybe project cost overruns, anticipated penalties, warranty issues, how would knowing that detail change your view of the company's future performance and maybe its long-term stability? It really underscores that financial numbers often signal deeper stories, and the real understanding comes when you can start to piece together the why behind the what.